stronger than expected first half growth has led to the longest curve inversion in nearly 4 decades for the 27 trillion US Treasury market. What does this imply is in store for the second half of the year?
Yeah, thanks, Roger. I think the fact that we've had very strong growth just means that Fed cuts are going to be pushed out even further, maybe than the market is currently anticipating, and more longer than consensus is. The issue is once the Fed does start to cut, what does that mean for repricing of all of the instruments along the curve? So whether it's SOFR futures or the Treasury market, and I don't think that the curve is going to be able to massively bull steepen until the Federal Reserve actually does cut, because there is this doubt in the market about the ability of the Federal Reserve to cut given the relative strength in the recent data.
And how do you see the election impacting the curve and Fed policy?
Yeah, I don't think that the election will have very much effect on immediate term policy from the Federal Reserve or the markets, with the exception of some very brief volatility. Longer term, though, the election results could have very significant effects on longer term policy, because the next president will be able to choose all of the Federal Reserve's leadership as well as one of the members of the Board of Governors. So who the next Fed chair will be is probably going to be one of the more discussed topics in the market, particularly if Donald Trump is elected. Joe Biden may reappoint Jay Powell, but if Donald Trump's elected, then presumably he would replace Jay Powell, just given their history and the fact that Donald Trump seems to be pretty dovish and wants the Federal Reserve to lower interest rates. So the next chair might be on the more dovish side than Jay Powell.
Thank you, Ira.